Mark Selby, how are you, sir?
Mr. Matthew Gordon, doing very, very well.
I am glad to hear it, and we're going to see you next week in London when you're doing a European road show, and then you're off. Are you going to the States tonight as well?
I'm off to the States to the Benchmark Mineral Conference, which is their big landmark battery metals conference in Los Angeles. So very much looking forward to that, meeting some of the groups that we're talking to in Korea, who will be over for that conference, given it is a pretty, in the battery space, pretty globally significant conference. So
right. Well, all good. It seems like people are lots of conferences going on for Christmas. I think people are trying to, get the messages out there, get tax loss season over and done with, and let's see what happens the next year for this big metal super cycle that we're hurtling towards. Right. We better rush through this because I know you've got a big investment group talking to you at 8. So let's get moving. So give us that nickel market update. Are you any more right this week than you were last week?
Yes, very. Unfortunately, I wish I was braver. 3 weeks ago, I kind of half made a call on the turn, said I needed to see a little more data. Obviously, the rest of the market did not share that view. And so we've seen copper and zinc prices up 12%. Nickel is up 30% to over $29,000 a ton. I've been calling for a move towards the end of the year. All year, and this is even sort of surpassed my expectations. I figured we'd get to the $28,000 level. I wouldn't think we'd be closing in on 30,000. Part of it was I actually saw a video of this like massive explosion at a new smelter in Indonesia. There's literally hundreds of furnace lines. One furnace line blowing up is not an issue. However, it is a new technology that they're looking to use, give better economics to produce matte than the traditional way they've been doing it. Obviously, not working so well. So we'll see how they go there. The sadly frustrating part of this is, so my high torque copper names, the call that I made in the spring of 2020, and these things ripped 8x from that period. Again, with the move off the bottom in base metal prices, names like Capstone, Taseko are already up 30 or 40% in 2 weeks. And again, this is, I hope some of you paid heed last week. I did say start to pick some up because it looks like we're on our way, moving higher. The extremely unfortunate part, and again, it underscores the issue here and the sad part of where the TSX is from a broader base metal perspective. We've had zero response. We have nickel hitting a more than a decade high in nickel prices, and yet if you look across us, Talon, FPX, and the rest of the bunch, you've seen no response. Again, not surprising with the Inflation Reduction Act, which was hugely bullish for any North American battery metals assets, saw zero response again, and it's a little bit sad way.
It's a little bit sad, but maybe not a surprise when you think about what happened with the LME earlier in the year. Obviously, price rocketing there and shot back down again. It has been let's call it elastic. Let's be nice. We'll call it elastic environment. They want to see some consistency in kind of this steady growth. Plus, it's tax loss season. Plus, let's face it, the Fed's hiking up interest rates, and maybe in terms of retail, less disposable income, discretionary spend around to boot. So it really is a case of people recalibrating, and I think perhaps off the back of the crypto world imploding last week, hurrah, that maybe people start looking at the realities of, real businesses trying to do real things in the real world, get rich slow type of stuff. We shall see. So nickel analyst forecast. What are we thinking?
Oh, yeah. No, I mean, that's when you look at, some of the other, again, from a market perspective, 100% agree with some of those issues in terms of, people having the cash to get there. But for those of you who do have cash, this is the kind of disconnect that we saw back in 2002-3 with China. Again, you've got analyst forecasts right now, some of them whom are claiming, 30% growth in EVs. We will exit this year with nickel demand between 80 to 100% growth year over year. Again, investors so we've seen ASX nickel stocks move 10 to 20% off the recent lows, but in Toronto, again, we don't have the big funds who've owned nickel stocks for a while, they still haven't really gotten into nickel in a big way. And again, with a pile of analyst forecasts who say, oh, we're going to be in surplus for the next 3 years, why should I, look at nickel with any intensity? And again, these guys are all 100% wrong. And, none of them were calling for this kind of move in the nickel price into year end. And so, it's again, to me, it creates, once in one of those multi-year buying opportunities. And as we talked about on the other call, to me, there's no greater indicator of what a fundamental disconnect there is in the metals markets right now, with US dollar at a multi-decade high, and commodity prices, instead of being a multi-decade low, are within 10 to 20% of their all-time highs. And so, if we're already at that point, let's see what the next 2 to 3 years brings.
Okay, and I'm going to interject a point here, which I was hearing a lot from CEOs over the past 2-3 weeks. Okay, they're not talking their own book; they're looking at the macro, and it's around that word you keep using, fundamental. Right? There are a bunch of companies. In whichever commodity you're looking at, we're obviously talking nickel, we're talking battery metals more broadly here, but whatever commodity you're in, the supply-demand fundamentals said, we are running out of this stuff, okay? It's getting harder to find, it's lower grade, it's deeper, it's more expensive, in an inflationary environment, it's tough out there. We need all of them to come on board online. They won't. Okay? You know it, I know it. And that is why, fundamentally, it's important to go for companies that you know will get into production. That's what you're going to be looking for. Show me how you get into production. Tell me how you're going to get into production. Show me where you've done it before. Those are the sorts of questions people should be asking in this kind of new reality, this new paradigm for mining. And that's why prices will continue to rise. And the companies, if you want a nice, easy ride, you go for companies with strong fundamentals, and don't play the market game. Play the fundamentals game. Will this become a mine? So I just wanted to say that, because this conversation I'm having a lot offline with CEOs. So let's start with nickel, because I'm just conscious of time. China fundamentals consolidating gains from earlier moves. What else do we need to know?
Yeah, so we basically didn't, this week, again, we saw a sharp move a few weeks ago for a couple of weeks. They've been consolidating. So we've seen the move in the LME prices, but we haven't seen NPI and sulphate move up. We'll see what happens next week. Generally, that's what happens. You'll see one or the other kind of drag the rest of the market higher. But the key thing here is, it's all moving in the right direction. We're seeing intermediates and mixed hydroxide, the discount get tighter, down to up to 84%, and again, that was in the high 60s a few months ago. So again, I think we're getting to that point where the overhang from any Indonesian supply will be on its way out, and again, that just sort of helps set the stage for what should be a very strong 2023.
Right. Okay. So lots to look forward to. Lots of moving parts which we're keeping track of each week. Great. I want to talk companies. And I'm very conscious, Mr. Selby, you giving us your time. I haven't really talked about you recently, have we? We talked about lots of other companies. And we're going to talk about FPX, Magnus, and Taurus, and Azure in a second. But you put out a press release today. Haven't read it. What's it say?
Yeah. So basically, in addition to the nickel cobalt we're going to make with nickel concentrates, we're going to produce, a huge amount of iron and be the only chromium producer in North America. So just finished 35 tons of ore through a pilot plant. The first phases of it, great results. We had a new magnetic flow sheet to produce the product. And the grade of what we're going to produce goes from 47.5 in the PEA up to the mid 50s today, and still averaging in the range of 2.5 to 3.5% chrome, which again is a perfect product to make ferritic stainless steel and other low nickel alloy steels. And so, we've also announced today that we're in discussions with a bunch of the stainless ferroalloy producers, again, looking to partner, keen to have a new source of nickel, iron, chrome in North America, in addition to the battery side, so pretty exciting on that front. We didn't talk last week, but, we had another big news in terms of our carbon capture. So, we had that big breakthrough where we got to get to net zero in hours and lots of carbon credits in days rather than months and years. We've now, as we said in that first release, we think there's a bunch of levers we can play with to make that happen even faster. And again, showed two levers helped make things go, 3x faster, that, we can get to get to zero instead of 36 hours, within 24 hours. And then we can get to 60% of the carbon capture for that particular material we were testing in just 24 hours rather than 6 days. So, very, very excited by the potential of this process. And again, where we think we can get this is at least 1 million tons of carbon credits per year captured.
Man, Amazon Prime of carbon capture. Well done.
There we go.
You can have that. But I want to come back to that and talk to you separately. But can you come back on as Canada Nickel? And I want to talk about that because I think that's a really big deal. Okay. Okay. Let's stick with the nickel because again, we're running out of time. FPX updated model. What do we need to know?
So this week the last 2 weeks here has been resource update week. So FPX put up an updated resource model, pretty much the same amount of nickel, but what they've done is included cobalt and iron grades because those will be both payable metals in their pre-feasibility study. So good to see that project continue to move forward. They're targeting a PFS at the end of 2023. Magna Metals, who acquired what's called the Denison Project, but it's the past-producing Crean Hill mine that was operated by Inco for a long period of time. Again, nice resource. 15 million tons at about a 2% nickel equivalent because there's nickel, copper, cobalt, PGMs in those deposits. Nickel grade just under 1%, and then another 16 million tons of open pittable material at about a 1% nickel equivalent grade. So again, I think good to see those types of discoveries. And again, just to put these in context, like I'm glad to see Magnum to pick that up. There's the biggest. Some of the biggest discoveries of the past decade were something like Nova Bollinger. That was 250,000 tons contained nickel. What they've got between the open pit and the underground is almost that amount of nickel, which they didn't have to spend a penny drilling for. So for their acquisition cost, they're getting a resource for cents on the dollar. The key thing here, and a little asterisk, is just any of these past producing mines, you always have to look to see whether there's any strings attached in terms of offtake agreements. So again, a lot of the times these assets were spun out with pretty tough terms on the tolling side. I don't know what these tolling terms are, but that's something just to keep an eye out for as this go forward. But again, kudos to the Magna team to pull this asset out of Sibanye.
Oh no, I loved it. They came on last week. He's super stoked about it. And I guess they're trying to, put a kind of NPV equivalent number on it as quickly as possible. People can understand the economics. All well and good. And on the tolling thing, it's kind of interesting. It's something that people sometimes skip by because it's kind of very casually said, well, we're not going to have to need to raise money for the capex because we're just going to toll it. Now, if I go back to conversations with someone like Mark Chalmers at Energy Fuels, he said, yeah, people can come and toll at our plant, but we'll be charging them 50%. So we'll control what they make, right? There is that component. You make something, but not as much as you think because you need us. So it's a kind of very one-sided kind of conversation. Or we know it's going to cost you X to ship it down to, I don't know, South America, over to Europe, wherever you want to do this. So because we know those numbers, we'll factor that into our negotiation. It's a tough one. It's a great conversation to have.
Yeah. No, and it's good, as I said, it's good to have the option, but it's not a free option by any stretch of the imagination.
It ain't a free option. There you go. What is? Centaurus.
Yeah. So again,
these guys, haven't we?
Yeah, this has been one of my favorites for the last 3 years, and good to see them charging along. They almost got to 1 million tons, just over 900,000 tons, up 30%. The good thing is they're measured and indicated also doubled. So they've got over 730,000 tons of nickel, 86 million tons at 0.85. This is one of the biggest resource growths in the market out there. And importantly, 27 million tons, at 1.5% nickel, with a good chunk of this either being open pittable or shallow ramp. So, again, great to see. This will be a nickel sulfide mine, unless there's something very sneaky hidden in the thing. But, I don't think there is. They're progressing it very well. And again, will be a welcome addition to global nickel supply, in the next few years.
And as you said, we pointed this out a while ago, didn't we? So if anyone who was listening with their ears pricked 2 years ago. Hopefully you've got in and made a bit of money along the way too. And then I guess finally, Azure Metals, they've been on recently. I think they're coming on again soon. Ridgeline deposit continues to develop nicely.
Yeah, so they've got a sort of a pretty classic nickel deposit style where you basically have a series of deposits along a set of structures, and so they've continued to understand where a bunch of these targets are and getting some decent widths, decent grades. Looking at 20 to 30 meters at 1.1 to 1.4% nickel, 0.4 to 0.8 copper with some cobalt. And again, don't know what the true widths on those are, but if they can get to the point where you can do some sort of a little bit bulkier mining underground in terms of thicknesses, if they can get there, then these could be pretty interesting. But again, this is a really solid exploration play, solid exploration team, and they continue to unlock there. And again, with the number of targets they have, we'll see how that progresses. But again, good to see some good exploration success, in a relatively new area. So.
Brilliant. Well, there you go. We wrapped it up. We did it in time. Amazing run through a lot of topics there. You've got a dash. I'll see you next week in London, one hopes. And good luck with all your investor meetings.
Sounds good. Safe travel, sir. Take care.